Hi, everyone. My name is Joshua López. I'm a real estate agent with Compass. I'm here with Anallely Blanchette, loan officer with Evergreen Home Loans. She has been doing loans for quite a while now. Started off with Bank of America. Realized that was a little too, we'll say, boring for now. Switched over to Evergreen Home Loans, where she had a little bit more freedom to do what she wanted to do, which is help the community by educating, giving classes and everything. I've been doing real estate for a while. I knew from the beginning I wanted to do classes. With my 10 years of tutoring experience, I knew it was the perfect fit. But I just love helping people and love sharing information. Whether you choose to work with us or other people, we just want to educate people and make sure you are making the right decisions for you. So tonight we're going to talk about the home buying process. Um, a lot of people go in and they start looking on Zillow, they start looking on Redfin, and then they're like, I want to go look at this house, only to realize that house is already sold, right? Well, we start the process a little differently. We always recommend to our clients, our friends, our family, everybody, first and foremost, to obtain a pre-approval. Now, there is a pre-qualification and a pre-approval. Anallely, do you kind of want to share with us a little bit about the difference between the two?
Yeah, absolutely. So, oftentimes when you go to a traditional bank, as Josh mentioned, I had an opportunity to work for Bank of America, BECU, and Chase. And so when people often go to the traditional banks, they typically go and talk to somebody, whether it be in person or over the phone. And that individual is going to collect information from you and basically take an application, run the automated system, so the computer, and tell you whether or not you're eligible to get a home loan. And then right away, they give you a pre qualification letter. So, oftentimes you haven't really turned in all of your documentation. So that's the biggest difference. A pre approval is when a loan officer is actually not only taking an application, but also collecting information in regards to your employer, going and doing a verification of employment and actually making sure that we have, we have determined the income that you want to use, especially for those individuals that work overtime. We want to use that overtime. We want to make sure that we have the correct income so we can tell you how much you can afford. And the underwriter, who's also part of the bank, is going to analyze your documents, your verifications of employment, just to make sure that you're meeting all the guidelines of the program that you want to use. So that the realtor and also the seller has certainty that you are pre-approved, that there's going to be no hiccups. Basically, they're giving you a guarantee. We're going to give you this particular loan based on the conditions that you don't go to Vegas and spend your down payment, right? And other conditions may be, make sure you stay on the same job, right? So anyhow, that's the biggest difference. And a pre-approval is definitely, I'd say, more of a guarantee, because you know that your financing is already solid, and the bank has done their due diligence to review all of your documentation.
Absolutely. But, even then, a pre qualification is not always bad. It's one of the best places to start because let's say, you just had friends that just purchased a home and you're like, oh, well, we're still like 2 years away from purchasing a home. Well, that's exactly what a pre qualification is there to do, right? You go and talk to a lender, and the lenders that I work with, especially Anallely, they're not there to tie you down to certain things. They love to share information. So what Anallely will do during this pre-qualification process is give you an idea, right? The pre-qualification will be saying like, okay, well, this is about how much you would qualify for in this moment based on the information you've told me, right? Based off this verbal information. With that verbal information, now you have an idea of what the price point is, how much you would need a down payment, how much you would need in closing costs. This way, it kind of gets you prepared, and you're like, oh, if I only need 20,000, to buy a home, well, we already have 15,000 saved up. Maybe we don't need those 2 years, right? So that's what a pre-qualification is good for, to give you an idea of like where your starting point is and how close you are to that starting point. Um, then, that pre-approval, that's when we want to go shopping, is once we already have that pre-approval. And right before we go shopping, the next step in the home buying process is setting those expectations, just as much with your lender as with your real estate agent. With your lender, let them know, okay, Anallely ran your pre-approval process, you submitted all your documentation, everything, and you're pre-approved for a monthly payment of, let's say, 3,500, right? Okay, well, Anallely, thanks, but my rent right now is only 2,000. Why would I want to increase to 3,500? Well, that's the thing. You don't have to go to the full amount, and that's where you set those expectations. You let us know, hey, I'd like to purchase a home, but I want my mortgage payment to stay 3,000 or less. I don't want to go up to the 3,500. Perfect. Now, the reason we talk about monthly payment is because based off the region that you're buying in, whether you're looking closer to Wenatchee, where the taxes are going to be lower, or whether you're looking in Seattle, where the taxes are really high, we can definitely move the numbers around so that it matches the price point you want to be staying at. However, 3,000 per month can get you, a condo in Seattle versus maybe a nice little 2-3 bedroom home down in Puyallup, right? So we shop per your monthly payment. So we don't necessarily focus on the price point of the home as long as you qualify per month at the payment that you want. And that is really what a pre-approval is. And setting those expectations with your lender is very, very important.
Absolutely. And, to add to what you're saying, I think, most individuals that focus on the payment sometimes find, the lender is able to find additional strategies to be able to still get to your, I would say, the price that you want to get to, but by showing you additional strategies, especially if you do have, have saved money, right? Or even if you have perhaps a 401k that is available and you are able to utilize some of those funds to come up with a good strategy that is going to get you to the home that you want, and most importantly, to a comfortable payment.
Absolutely. Now, when setting the expectations with your real estate agent, let them know as well what your monthly payment target is. Let them know you're not trying to go over a certain amount, because maybe you're looking at a home with an HOA. Well, we have to know those things too, so that we can take that into consideration. Okay, well, if the HOA is 400, then your max payment on the actual mortgage is only 2,600, which is going to do a lower price point of a home, right? In addition to that, letting both your agent, your lender know what you expect in terms of communications, whether you prefer texting and that's your method from 9 to 5 is texting is your only option. Okay, great. We're going to focus on that. And then you can take phone calls after that time. Great. When is the best time to do meetings? All that kind of stuff is important for us to know, so that we are fully on the same page. We're working towards the same goal, which is making you a homeowner. So once we are out there shopping and we find the property that we like, we get the paperwork going, and Anallely is ready for us to go through the inspection. So the inspection process of the home buying happens right after we go under contract, unless you do what is called a pre-inspection, which isn't as common nowadays in today's market. However, doing an inspection on a home, what the inspector is doing there is letting you know what you are purchasing. They're not there to advise whether or not to continue with the purchase. They're not there to tell you how to fix things. They're not there to, they're there to let you know what is broken, what is working, how much life expectancy, what kind of things you should be looking out for in that specific home.
How to turn on the fireplace.
Yeah. Yes. So all those different things, right? And it kind of lets you know what kind of cost to expect to incur within the home buying, or sorry, during your ownership of the home. However, that is also where you can negotiate with the seller and say, hey, we do want to move forward with this purchase. However, first we would like to see this fixed, or if it ends up being a lot more work than you anticipated, that's where you can say, hey, we would not like to continue with this purchase and proceed on to looking for more homes, that is.
And what's the typical price for an inspection, whether you do
Absolutely.
single family or condominium?
Absolutely. So inspection prices range anywhere between 350 to 600, depending on the inspector you are using. They do go higher if the home is larger, if there are multiple buildings on the property. So on average, I would say they are around 500, 550, but they can range as low as 350, and I've seen as high as 700. But I do know the larger the home, the more it costs, and the longer the inspection runs too. Typically, inspections go for about an hour, maybe an hour and a half. They go into the attic, they go through the crawl space, they make sure they let you know what you are buying. So
Good. It's a good thing.
absolutely, always recommend them. If you are doing the down payment assistance program, it is required to do an inspection.
Require for the lender to collect your receipt
Yes.
for that inspection.
Once the inspection is complete, we move on to the appraisal of the home. So I let the lender know and say, hey, Anallely, we are done with the negotiations with the inspection. We are proceeding with the loan. She orders the appraisal immediately because that can take, anywhere between a week to 3 weeks to get. And can you tell us a little bit more about what the appraisal is and what it's for?
Yeah, absolutely. So the appraisal that you're ordering is actually a report that you're requesting, and it's done by a third party, and is basically from a pool of appraisers. And these appraisers actually work with all financial institutions. They're certified to help deliver the market value of the home. So they're going to analyze different homes and compare your house or your future home with other homes around the area, right, to determine the value of that home, and that would be your future home. So the cost of the appraisal report, which is a cost that gets collected at times by some lenders upfront, or it could be at the end, included with your closing costs, could range anywhere between $750. Could go higher. Sometimes, as Josh mentioned, just like the inspection, depending on the size, the location of the home, it could go up to $1,000, $1,200 if you want a rush on that appraisal report. And do you want to tell them a little bit about, we mentioned that it's a report that will give them the value, and what happens if the appraisal doesn't come in at value.
Absolutely. So once that report comes back, the lender lets the agent know, hey, we got the appraisal back, everything is good. Or, hey, we got the appraisal back and it's undervalued. Now, first and foremost, the appraisal only goes to the lender and to the buyers. This is because it is the buyer's information and they are the ones paying for the report. So the agent doesn't receive this. It has to come from the buyers or the lender. And once you let us know, hey, we submitted an offer for $450,000 on this home, and the appraisal came back at $420,000, right? So what happens then? Well, that's where we go back and negotiate with the sellers and say, hey, we got the appraisal back. The appraisal only came up to $420,000. If the home is indeed valued at $450,000, we could go back and say, hey, can we get another appraisal done on this? Is there an additional charge if that is done?
Yes, there is an additional charge, and sometimes it varies a little bit. I want to say maybe it's like less than $250, and then we can proceed with getting a what would be consider a different perspective on that value.
Yeah. So that is one option. I can't guarantee that'll work. That doesn't always come back, and they could come back and say, hey, yes, we did see the other properties that sold in this area. It is actually worth the 450. Okay. Or we could go back to the seller and say, hey, seller, we only want to purchase this home at 420 because that's all it got appraised at. If that's the situation, the seller can then agree to reduce the purchase price to 420 instead of the 450. Or they can come back and say, we can do 430 and you come out with the other 10,000 out of pocket, which means in addition to your closing costs and your down payment, you would have to have an additional $10,000 because that is the difference between the appraised amount, which is what the bank is willing to loan, and what you are actually purchasing the home for. Now, we saw a lot of this at much higher numbers for sure during the height of the pandemic. And this is where a lot of people were maybe getting a little frustrated with that market, but we are not seeing that so often nowadays where you have to put money over what you're asking or what the bank is lending you. If anything, we're seeing appraisals come back a little bit higher, sometimes a lot more higher. And there's nothing necessarily wrong with that. What's going on is more so because of the increase in interest rates, not as many people are able to offer as high on the homes as they once were. So, people that were shopping at the beginning of the year that once qualified for 550,000 with an interest rate of 3%, 3.5%, are now shopping with an interest rate closer to 6%. So that 550,000, because their interest on their monthly payment increased, they are now only able to afford 475, maybe 525. But overall, that interest rate reduces how much people can afford on a home. But so we're seeing homes price at what the market used to be. So those appraisals are, for the most part, coming back at value, if not with a little bit extra, with a little bit of equity for you. So once the appraisal is done, that's where Anallely gets her team together and gets the closing documents ready and lets you know. So what kind of forms do they have to sign at that point?
Well, as soon as you're giving me your the property address of your future home, you are given your loan estimate, which is basically an official disclosure letting you know all the terms of the loan that you're getting. And once that's signed, we go into underwriting for final approval. Of course, we got that appraisal report back at value. We go to underwriting for final approval, and that's where you are giving your closing disclosure. So that document is actually the documentation that is going to tell you how much money you're going to need to provide to the escrow office, if any, because if you are using, as Josh mentioned, utilizing or taking advantage of the down payment assistance program, maybe you also have additional funds for your closing costs. And, at the end of the day, you've given a really good amount of earnest money. So maybe you don't have to have very much money for, escrow to have as your proceeds of your closing, right? So, and once that closing disclosure is signed, which this one's really important that you sign right away, because then we start counting 3 days. You have a 3-day waiting period where we can actually go ahead and start funding your transaction. So you have time after you sign this disclosure to review your documents and, make us aware of any changes that you want to do.
And change of heart.
Like change of heart, right? Well, there's a consequence for that, right?
Absolutely. So there are consequences, but if you have a change of heart, that's what those three days are for as well. You decide, hey, I'm going to miss out on, my earnest money and the inspection and
the money that you put down for your appraisal. So, yeah.
But if you absolutely decide, hey, maybe home buying isn't the time, this isn't the time for me, that's where you let your lender know. Let them know that, hey, I know we're at the finish line, but I can't cross it.
Yeah.
There's nothing wrong with that. But that's exactly what this is for, so that you guys can make the decision that is best for you. And if you want to proceed, all you need done is patience. Because we do have to wait those 3 days.
Yeah. And then, pretty soon after that, you have the escrow office calling you to set up an appointment to sign your final documents. And then, of course, you get the fun part.
Yes, absolutely. Once you sign documents, and the sellers have signed their documents, that's where we go. They send the documents over to the county to get recorded. Once they do get recorded with you as the new homeowners, that's where we get the phone call and say, hey, Mr. and Mrs. Smith have become homeowners. Do you want us to give them a call, or do you want to call? I'm absolutely going to call them. I love delivering the good news. Mm-hmm. But that's all it takes to become a homeowner. We do also offer classes where you can do down payment assistance. So there are loans with as low as 3% down. If you're a veteran, you could do 0% down. But there are some there is a down payment assistance program here in Washington where you do have to attend a 5-hour class, and you have to be making $180,000 or less in total household income, and have a minimum credit score of 620. And yeah, you can get up to 4% of the loan amount in assistance for the down payment. So if you are interested in that, or just have more questions about the home buying process, feel free to reach out to us. If you have any questions, feel free to type it in the chat. If not, let your friends and family know. We do this every month, 6:30 on the third Tuesday of every month. Thank you for joining us.